Could have made it worse. You could have gone from August as infinitely more inflows because Bitcoin has outflows in August. There's a relentless bid for Ethereum ETFs. They've pulled in $4 billion so far in August alone. That annualizes to close to $50 billion in a year, right? For context, Bitcoin ETFs did 36 billion in their first year. It's just a flood of money into a relatively small asset, which is why the chart looks so good. And I think it's going to continue for the rest of the year. It is the institutional attractive asset.
Matt Hougan's investment thesis reveals a sophisticated understanding of how different forces in the crypto market reinforce each other. He sees stablecoin growth as the underlying engine driving value across multiple blockchain ecosystems, not just Ethereum, which forms the foundation of his diversified approach to digital asset investing. While projecting potential 12x market growth, he simultaneously cautions against putting all eggs in one blockchain basket, since predicting the ultimate winner remains impossible. His analysis of Ethereum ETF performance provides concrete evidence of institutional appetite while illustrating the amplified impact of capital flows on smaller market cap assets. The $4 billion that flowed into Ethereum ETFs in August compared to Bitcoin ETFs' $36 billion first-year total demonstrates significant demand, but Hougan contextualizes this within Ethereum's roughly $500 billion market cap. This creates an outsized impact equivalent to approximately $20 billion flowing into Bitcoin, highlighting both the opportunity and inherent volatility in smaller digital assets. The stablecoin expansion thesis connects these observations into a coherent strategy. Hougan's prediction of 10x to 20x stablecoin market growth extends beyond Ethereum to include ecosystems like Tron and others, supporting his diversification argument. Rather than chasing current Ethereum momentum alone, he advocates positioning for broader digital asset growth while maintaining exposure across multiple platforms that could benefit as stablecoins proliferate. This approach allows investors to capitalize on the overall trend while mitigating the risk of backing the wrong blockchain in an uncertain competitive landscape. Before we explore Matt Hougan's perspective on Ethereum, stablecoins, and the evolving role of multiple chains in the financial system, be sure to like this video, subscribe to the channel, and tap the bell icon so you never miss future updates.
Yeah, well, the thing is, if you think about professional investors, most of them don't own gold. Gold is like a niche asset. Maybe 15, maybe 20% of them own gold. The other 80% just own stocks and bonds. And I think there's a lot of people who look at Bitcoin and are like, yeah, it's digital gold. I don't own gold, but I do own technologies. And so we're hearing a number of people skip right past it and go straight to ETH. And I think, again, the tokenization story, the stablecoin story, the cash flow story, it all fits a professional investor framework. So I think we're going to see these flows continue. It's cheap enough. And there's also, the old saying, you don't get fired for buying IBM, which was true in like the 90s. If you were a consultant and doing a computer installation, you bought IBM because if you went with another company, you got fired. The same thing is true on tokenization. There's no risk for these Wall Street firms, not just BlackRock, but others building on ETH. There is risk if they decide to tokenize something on any other chain. And so I think people understand that, and that creates a flywheel, that creates a network effect. It's worth noting other stablecoin focused chains are doing quite well. If you looked at the chart of Tron recently, could have made it worse. You could have gone from August as infinitely more inflows because Bitcoin has outflows in August. There's a relentless bid for Ethereum ETFs. They've pulled in $4 billion so far in August alone. That annualizes to close to $50 billion in a year, right? For context, Bitcoin ETFs did 36 billion in their first year. It's just a flood of money into a relatively small asset, which is why the chart looks so good. And I think it's going to continue for the rest of the year. It is the institutional attractive asset. The other day I was on with a multi-billion-dollar advisor. They didn't love Bitcoin. They wanted everything else besides Bitcoin, and they ended up just buying an Ethereum ETF because that's all they can access. I think this continues, for the rest of the year, right? That market's going to 10x, 15x, 20x. But I do think this stablecoin thesis is playing out on multiple chains. I see you're lifting it. ETH just gets the headlines because it's the biggest, but you're seeing it lift Tron. You're seeing it lift other assets. I think it's a long-term trend. I think that is a fairly large risk to those companies that people aren't reckoning with, and I think could rear its head pretty quickly. my view of investing, like how do you invest in this, is you assume the market's going to 12x, but anyone who tells you it will just be one chain or knows which chain it will be is lying. You have to sort of bet the field. I do think ETH right now, particularly because it's the only one with a normal ETF associated with it, is getting all the institutional flows, and that's lifting the price substantially. It's worth remembering the asset itself is not that big. It's $500 billion, right? So 4 billion inflows into an ETH ETF is, I guess, equivalent to 20 billion in a month into Bitcoin, right? From a size versus market perspective. So it's capturing that, but I think you're right. It will be multiple chains. At least it could be. We don't know for sure. And there's a lot of uncertainty around that. I mean, first, it's worth the Solana playbook is very clear. We've seen it work in Bitcoin. We've seen it work in ETH, which is ETF with flows, simple story, and treasury company equals rocket ship like returns.
Yeah.
And it's really hard to look at Solana and not see that in the near term future. One or two news stories about Bank of America tokenizing something on Solana or JP, you get that and the price goes up substantially. And as you mentioned, the chart looks really good. I don't think it continues down because I think people will get tired of it. I don't know. My base case is that there's going to be so much demand for these assets in Q4 that it's going to lift multiple boats. I still think Ethereum will find a bid, but yeah, I think you'll see money rotate into Solana for the exact reasons we're talking about.
The more Bitcoin treasury companies, you have to start looking at these.
And you get someone like Kyle or Tushar from Multicoin could play the role of Saylor or Tom Lee, right? They're exquisitely good communicators. They make a very strong case very simply. They're maybe a little bit more publicity shy, but they're probably willing to do it in this case. And then you remember the thing people forget, because in our minds, Solana and Ethereum are the same size, but they're really, really not, right? Solana is 1/5 Ethereum. We talked about ETH being 1/5 Bitcoin. Solana is 1/5 Ethereum. So $1 billion into Solana, if that becomes 2 or 3, that's a huge amount of money. Inflows into Solana, if that's $1 billion or 2 billion in a month, that's a huge amount of money. You have to do that multiple because the media coverage in crypto puts those at like 20% discounts, but it's 80% discounts from a market cap perspective. Like it's a really different scenario. And I think people probably understate that.
Matt Hougan's latest observations reveal how institutional adoption could create unprecedented price catalysts across the crypto ecosystem. His Ethereum projection to $10,000 hinges on sustained institutional momentum, where even modest 1 to 2% portfolio allocations from professional investors could drive consistent $4 billion monthly inflows. With analysts like Tom Lee suggesting 5% ETH allocations, Hougan sees $1 trillion Ethereum valuation as entirely realistic, especially considering Bitcoin already commands a $2.5 trillion market cap. However, Hougan identifies an even more explosive potential catalyst that markets are completely ignoring. While assigning zero probability to U.S. government Bitcoin purchases, he believes the actual likelihood sits around 10 to 20%. Though unlikely, he argues this dismissal creates asymmetric opportunity. Imagine if news broke that the U.S. had quietly accumulated 1 million Bitcoin. Such an announcement could instantly double prices and trigger a global chain reaction of nation-state adoption. These institutional forces create a double-edged dynamic that Hougan acknowledges with some unease. He admits feeling uncomfortable about positions like holding 10% of Intel, recognizing that institutional adoption brings both unprecedented opportunity and new complexities that didn't exist in crypto's earlier, more decentralized phase. Let's get back to the interview.
Solana is like a little dinghy. It is not going to take like a 25 horsepower motor is going to send that thing on a rocket ship. It is a small asset, right? Like imagine ETH in April was a couple $100 billion, $200 billion. And we saw what this strategy did to ETH, right? Doubled, tripled the price. Solana is that, but even smaller. So I do think Solana is pretty attractive right now. If we get that kind of inflow, that does mean, you're talking about $10,000 ETH. I think that's not unreasonable. If we really see this, get 1-2% allocations in professional portfolios, if we see month after month of $4 billion of inflows, and we see Tom Lee, racing towards his 5% of Ethereum, this is going to be $1 trillion plus asset. Right? That doesn't seem ridiculous with Bitcoin at $2.5 trillion for ETH to be $1 trillion asset. That doesn't seem absurd to me or counter to the narrative. So I think there's every possibility we get that. No guarantee, but every possibility we get that. Yeah, I mean, this is a portfolio of crypto equities, right? So it's everything from Circle to Coinbase to ancillary plays like Robinhood. It's being bought mostly by financial advisors who aren't yet comfortable owning Bitcoin directly. And Bitcoin is not fully approved on all national account platforms. You can't solicit it on some national account platforms, but just as just equities. The incredible thing about crypto equities, which people I think overlook, maybe two things I would say about them. The first is they're operating in a market that's growing at 60% per year over the last 5 years. This is like, take this into any other area of the equity market and think of a market that's compounding at 60% a year. Would you want to own the companies building in that space? I think that's right. The other thing that I think people overlook, and they wonder why Circle is so expensive, is there's a huge acquisition premium for these companies. You have all of Wall Street wanting to move into this space. They're never going to trade at fundamental values, like Warren Buffett style values, because they have this acquisition premium. If a Wall Street firm wants to make a play, they could build or they could buy one of these companies. And I think that combination of like the underlying growth of crypto and then the acquisition premium has made this like it's a great returning ETF. We're seeing a lot of inflows from advisors. It's part of a diversified crypto portfolio, to be really boring. You want to own crypto stocks, you want to own crypto assets, you put them together and you wake up in 10 years and you're rich. My only thought on that is it's not priced into the market at all. Everyone is 100% skeptical of that happening. Everyone is 100% skeptical that the US will buy more Bitcoin. And I think the chance is probably greater than zero. It may be low, it may be 10%, it may be 15%, it may be 20%, but I think the market has priced it at zero. So when I talk to people about, a question I get at conferences a lot is what could cause the price to go just haywire up and to the right? This is one of the things where you could see an announcement and the price could double.
We bought 1 million Bitcoin over the last 4 months while it was consolidating.
That's exactly right. And then every nation in the world, I mean, it's unlikely, but I don't think the chance is quite zero. The Trump administration has shown that the chance of anything being zero is zero. So you never know, right, what's going to happen. And I think there's some small chance that we'll see something like that. I don't think so, but there's a chance, right? Like I might buy crypto assets, but it's just automatically set up. Look, it's going to happen slowly. That market is slow moving, but it's going to happen eventually. It's going to happen in 529 plans, right? People saving for their kids' college are going to want some percentage in Bitcoin. And all of that is going to crush volatility and like do the equivalent of increasing the PE ratio of Bitcoin. There is no PE ratio, but it just means price up. It means more inflows in. But it also, it has impact on the market, and supply demand has impact on the market, right? Launching these treasury companies has impact on the market. I think you have to take the good with the bad. I wish that sort of stuff wasn't happening. I do think it exposes us to risk, but on balance, right? It's part of the market now. Look, I wish we didn't own 10% of Intel. That strikes me as sort of strange.
As we stand at this inflection point, the question is no longer whether digital assets will become part of the global financial infrastructure, but how quickly and in what form this transformation will unfold. The convergence of institutional capital, regulatory clarity, and technological maturation is creating a momentum that feels irreversible, yet the ultimate winners and losers in this space remain to be determined. For investors, policymakers, and financial institutions, the challenge now is navigating this transition thoughtfully, balancing the extraordinary opportunities with the very real risks of a market still finding its footing. The billions flowing into Ethereum ETFs while Bitcoin sees outflows signal that we've moved beyond the era of treating crypto as a monolithic investment. Instead, institutions are making sophisticated distinctions based on utility, growth potential, and strategic positioning across an increasingly complex digital landscape. What does it mean when Ethereum ETFs are pulling in billions while Bitcoin sees outflows? Stay tuned for more data-driven insights on the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thanks for your support and enjoy the video.